Let's venture into disaster relief and casualty losses. How does that apply to income taxes?
There's a lot of tax considerations along the way, and it's very specific to each person and each property situation and each disaster situation. So if you unfortunately wind up in a situation like that, unfortunately, with all the other things you're going to have to deal with, you're at least going to have to give some serious thought to the tax implications of your situation. And it really is end to end. So if you think about all the elements of a disaster or wildfire situation with a home, every element along the way, from the disaster itself until the final resolution, has potential tax implications. So the destruction or damage of a home has some potential tax implications. The insurance proceeds received on that situation potentially have some tax implications. Your decision of whether to rebuild or tear down and sell or tear down and keep, all of those decisions along the way have potential tax implications that, again, are very unique to your situation, your property, your disasters. It really, that's the takeaway for me. Again, if you're in that situation, your world is already turned upside down and you're trying to replace your entire life almost. And unfortunately, along with that, you really should seek some tax advice. Again, very specific to your situation, because that decision on the other side, rebuild, sell, keep, each one of those decisions has a tax implication. And because the numbers are so big, those tax implications could be big as well. So you really need to get specific advice for yourself as you start to make those decisions about what you're going to do in the future. Just make sure you consider the tax implications of those decisions also.
That's another reason to talk to your CPA.